Hi, and welcome to episode 11 of How to Go Independent. Appreciate you joining me today, and I've got the first of what I think will be many interviews with existing successful independent advisors. I really enjoy hearing their stories, and I hope you will too. You'll hear different backgrounds in coming episodes. Today I was talking to Craig Cowles, who I've known for about 2 years, who's actually part of the network that I help manage and put together. So I've got a good sense of how he does business and why. And I really, I asked Craig if he would come on because he's got an interesting story. He was a commercial pilot before he got into this business. So as you might expect from a pilot, he's very detailed, very thorough, process-driven, uses checklists. And I think that's something that a lot of us can benefit from as we craft our practice and try to create a predictable client experience. And he loves to talk shop. And this show is, as much as anything, is about hearing what other advisors have done in the past, are doing, and what they plan to do. Because I think if you are doing your own homework about either your existing independent business or one you might want to establish, I think that's just a great way to research things. What's been done before? There's any number of ways to set up a business. I found that as I explored my options several years ago, and I think that's very useful. So a couple things I wanted to highlight that I'd like you to listen for. First, one thing I wanted to amplify that Craig mentioned, he talked about a staff member. He has a part-time assistant you'll hear about. And he talked about the importance of getting to know any tools that you have them use very thoroughly before you have your assistant use them. And I think this is a great process point. We sometimes want to have people on hand, and I know I'm the same way, who we can just throw a new tool at and say, here, figure this out, tell me how to use it. And while that might be the holy grail, I think most of us are not going to have that kind of staff person on hand, the person who can understand what we might be able to do with a new tool, whether that's software, hardware, research, CRM, any kind of tool that you're expecting to use and implement well. I believe, like Craig mentions, you have to really dive in and understand what can it do, look at what you expect to do for your business, learn a little bit of the ins and outs before you then ask someone to use it on your behalf. At least I think that's the way to maximize the benefit. So a great point. I just want to amplify that a little bit. The other thing I'd like you to listen for is something I will kind of contradict or give you the other side of what Craig outlines as it relates to where you meet clients or prospects. He said he prefers to meet them basically in the office, have people come to you. And I've heard that expressed before. It sets you up as a professional. It sort of frames you as the expert. You know, the doctor doesn't come to you anymore. You go to the doctor. Lawyer, usually the same thing, etc. So I understand that mindset. However, being independent, I think one thing that we need to all remember is we can set up our business the way we see fit. And that's a great example. Again, in a wirehouse employee environment, you could probably do the same thing, but I tend to look at my clients and a lot of them value me going to them, whether that's their office, whether that's we do a review over lunch if we're not getting into a lot of technical details, or I go to their home. Not as much anymore. That's unless they're retired. I try not to do evening appointments having young kids. And again, that's a customization I've made. When I started, I did a lot of evening appointments. So I wanted to kind of point that out. You'll hear Craig's conviction on this issue. I'm not so convicted either way, but I do tend to see a lot of my clients don't come to my office anymore. We talk a lot on the phone. We will get together over breakfast or lunch to review things, or I will go to them. And that works for me, works for my clients. And so, again, not a one-size-fits-all model. That's sort of the idea. So listen for those two things. And without further ado, we'll get into the conversation with Craig. Here we go. Today I'm talking with Craig Cowles, who's a CFP and actually part of the network that I help manage and put together. So we've known each other for a couple of years, and I thought he'd be a great candidate to have and talk about his practice and how he got here. So thanks for joining me today, Craig.
Well, Sean, it's great to be here. I'm glad that we had a chance to talk about this today. Any way I can help?
Great. Yeah, I know you and I enjoy talking about the business quite a bit. So
figured might as well go on the record, and hopefully someone else out there can benefit from either our knowledge or our pursuit of knowledge. So first, why don't you tell me a little bit about yourself and kind of your background, and then kind of your how you got here story, how you get in the business, what did you do before you got into the financial advisor business, and go from there.
Well, great. Well, there's a pretty long history when I started in college, but the most recent thing I did was I was actually a professional aviator. I was basically a pilot. I flew corporate and also kind of what we call in the large aircraft world private charters, which we did a lot of sports teams for, flying them around, including the U.S. World Cup, World Cup soccer. We did that a couple of years ago. We flew around basketball. We flew around hockey teams. And I kind of come from that background. Never really flew for a major airline, even though we did sub in for major airlines, and I flew, the Boeing commercial aircraft starting in my career, and ended up kind of in the smaller jets, the corporate side. Then it was decided on September 11th of 2001 that things changed a lot in the aviation world. I was a pretty senior pilot in my organization that I worked for here that was located in Dallas, and so I wasn't affected, but we saw the writing on the wall what was going to change. A lot of my friends that worked for some of the major airlines got laid off almost within the first year, that had been there basically for a year, and believe it or not, they had only gotten recalled up to about 2 or 3 years ago based on their seniority. So it was kind of amazing that it took that long just to get back in the swing of things. And at that time, my wife and I, we live here in Dallas, and we have 2 boys, about 10 and 5. And we didn't actually start our first child until when I got married back in 2000 until 2006. So I had to make a decision at some point whether or not a career change was warranted, even because I'd spoken with several of my colleagues in the aviation industry, and they said, it might be worthwhile to look into something different than this, because most of the time, if you appreciate your lifestyle, and that is your time and your with people and whatever, the industry's changed since what I jokingly call the old Pan Am days, when it was a lot easier and a lot different type of era and environment to work in. So changing careers is kind of what happened, and a gentleman invited me to say, hey, you could start in financial services part-time. And I said, man, I have no experience doing this. And they said, that's okay. Half the other people in the industry don't either. So that's the kind of funny part. I'm like, wow, if that's a word of comfort right there. But what I decided to do is when I go for something, I usually go into it full force. I just don't kind of take it half-hearted and go into the organization and say, I'm just going to do this, a half job on this. I'm just going to go into this. So, I decided to go on the certified financial planner track and eventually got that. I actually started in the business probably in 2001 part-time.
So what else attracted you to the industry besides the potential flexibility that we've kind of appreciate these days?
Well, I'll tell you what, I would say that it was my own family. I mean, my parents are divorced, and it was not a very clean divorce. And what I found out was that a lot of times, the arguments that my parents would have was about financials and about money. And I thought that was very interesting because I never knew that there was any other way. I mean, my dad was, mildly successful in his career, but I know that they had their squabbles about their values about money. And I felt that, wow, if they would have just sat down and talked with somebody, which they did at one time, but they didn't agree upon the outcome of the scenario, that people really need to have a sense of values about money. In fact, the communication about money in and of itself is probably the number one cause for divorce, about what in their value system and how they're misaligned. So I really fell into favor with helping people with determining their values about money instead of just going along to get along, that sort of thing.
Right.
And so I think that what really gave the impetus is I never really talked about it myself, and everybody says don't talk about your money with other people because that's what you grew up with. That's the kind of psychology behind it. And what ends up happening is it really hurts you in the future. So I said, I'm trying to get more people to be comfortable with talking about their money. It's okay, but let's focus on the means and never the end. which money is, and don't have it become your end. Focus on something else, and that's your values of what it provides. And so that's why I kind of got into it, because I really wanted to do that. I didn't want to be a stock picker, bond guy, or select mutual funds. That was not my game. My game was truly trying to help people achieve what they really wanted to achieve.
Yeah, when you really sit and think about it, and hopefully a lot of us got in the business because of that, it's amazing how much of our lives is touched by money. And like you said, it's not the objective for most of us, but it certainly is. It's a key facet, just like our health and other factors that it's involved in everything. Very interesting. I didn't know that about you before we talked. That's what I like about these interviews. So you never really had if I'm not mistaken, an employee arrangement since you've been in the business, right? Is that accurate?
Yeah, I always have been in the independent track. I've been kind of fortunate. I did work for one captured organization. They did an excellent training program on how to work with people, which I really appreciated. They really knew.
Now, when you say captured, for those people that maybe have been in the wirehouse environment and maybe haven't heard that term, can you clarify what you mean by that?
Well, they were part of an insurance broker dealer, which is usually takes people from the start, and it was an easy way to work. And they really had a great training program. But the thing about that is you get great training there, but eventually you grow out of it. And there's nothing wrong with being at one place and growing out of it. Even though they'd like you to stay, they can't force you. And so I decided I kind of outgrew that model and decided to make that break. So
now, did you find that to be sort of owned by an insurance company? Was there a fairly steady focus on the insurance aspects of planning, or was it pretty balanced, or what was your experience?
No, I would say fairly balanced. I mean, it was one of the few organizations that said, no, we think that if you're going to do this business, you need to look at it with an offensive and defensive perspective. I mean, I believe in the insurance side as a lever for a person's estate, and I usually explain it as, look, you're going to give up 10 cents for every dollar that you're going to, for risk, to have access to a pool of risk. Because if something happens, and here's what really solidified it. I did a policy a long time ago for one of my friends who was really appreciative. We got him just a little life insurance, let's say, and I wrote the policy for him. And we did it. They had a very exacting software to make sure that it was the right coverage, not over coverage. Term insurance, very inexpensive. And we usually, just as an added bonus, we just went ahead and added the children's riders to those policies. Just if you have a couple kids, look, it only costs you $1 a year to do it. This is just burial costs, just in case something happens. We know hopefully nothing happens. Sure enough, about 4 years ago, that policy was used because his daughter developed a rare form of leukemia, and in about 2 weeks after she was in the hospital, she died, October 31st. And that was an 8-year-old. And if there's anything that will wake you up in your life is going to an 8-year-old's funeral open casket. That's something that is ingrained in my brain forever, because my son used to play with his daughter. And she was a little bit older than he was. But what really impacted me was the service that I provided that family, because I worked with the funeral director to get that claim done. And that made a dramatic difference. And his wife and him still thank me today, even though, because they couldn't, he was a colleague of mine in the aviation, and they could at least give her a nice funeral instead of worrying about the cost for it.
Right.
And that was something that wakes you up every once in a while, saying that, and he's kind of my poster child that I say in that was my actual first death claim ever paid, where I was the writing agent on a policy. Wow. And you just don't, I mean, a lot of people say, oh yeah, I had this guy die, he's old and whatever. And another story, the same thing happened. I mean, I don't, maybe it's just me, a guy that was a oncologist that I insured. He wanted a term policy. He had a whole life, and he was looking at it. I said, you probably don't need that at your age. You probably just need a simple term policy to cover till this point. And I did that one about 5 years ago, and I'm talking about insurance of all things. And it was about $250,000, and he was retired oncologist, and I hadn't checked in with him in a while. he managed his own stuff, and pretty smart guy. I mean, really smart. And I call him 3 years later, and he says, "Wow, it's fortunate that you just called." He says, "You're not going to believe this, but 2 months ago I was diagnosed with cancer, and last year he died. And guess what? The policy that we put in force was paid to his wife exactly as planned within 3 years. Second death claim. It was unbelievable that that 2 cases that really were impactful, which meant something to somebody. When you do stuff like that, that's what really matters in this business, is when you see the net effect of your worth. And what I would say is, to anybody who's a financial advisor, is that when I did this business, that I never thought, oh, it's insurance, that's a bunch of, you pay a bunch of money in something you're never going to use, and it never says
it's a necessary evil at best, right?
Yeah, and then originally when I was taught in this business, I was always taught by the guy that said, don't ever discount that. Don't let it go. Because he says, do not write any asset-based business unless they have adequate protection. Because and even the compliance officers will tell you, if you quote, sell something that's an investment-based asset to them, and you did not go over the insurance with them, the family will come back to bite you on that, because you did something that you didn't do a holistic job. And that's the first thing I learned in this business, is make sure you do a proper analysis for the client so they understand where their risks are. And I was like, wow, okay.
Yeah, I would say for anyone listening, that's just like the proverbial cobbler with no kids that have no shoes. For ourselves to look at that and make yourself your best client from a planning perspective, especially if you have a successful business. One of the few things that can derail your family's long-term plan is if you're not here to earn that income that maybe you've built over the years. And that's something that I sort of have a healthy paranoia about for me personally. And I know my wife appreciates the level of life insurance I have in place. So, yeah, it's term. It's very straightforward, and I need to make sure I accumulate some security outside of the insurance by the time it expires. But
absolutely,
we're not guaranteed tomorrow, so it's a good plug for covering ourselves.
Ask people this question. They said, "What's your birth date?" They can always tell you. You ask them what their death date, they look at you like they're some sort of deer in the headlights. What do you mean? That's the question you ask.
Yeah. So I know you've made at least one change of broker-dealers, firms you're associated with. Tell me a little bit about what triggered you to do that kind of intra-independent firm, because that's interesting. I know there are several people I know that have done that, but the reasons I find aren't as exciting to talk about from a payout standpoint or other flexibility. But what were you looking for when you made that change? And kind of tell us a little bit about that story.
Well, first of all, there's always qualify this. There's no perfect firm out there, but for your own thinking, there is a perfect place to be in your life. Value-wise, I looked at it from the first time I encountered a coaching program that I used for a little bit that helped me realize what I needed to do and what I needed to focus on. And that was, what sort of lifestyle do you want first? What are your values that are most important to you? What sort of business do you want to have? What sort of clientele do you want to have? What sort of problems do you want to avoid? What sort of issues do you really want? And then you take those measurements of that program, a success diagram of what you want your business to be. Now, first of all, you have to be, I believe, of an entrepreneurial mindset, or at least a business mindset to even go independent. That's the first thing you have to decide, is do you want to be an employee? Do you want to be comfortable being self-employed, or do you truly want to be entrepreneurial and have a business mindset? That's the first thing you have to determine. So in my case, I would have said, how restricted do I want to be in what I can do, or do I trust myself enough to know that if I do something, I'm going to go at it full-hearted? Now, everybody knows this business is extremely difficult. Why ever anybody would pick this industry trying to talk people out of their money to go with you, giving them some sort of assurance that everything's going to be okay, and it's one of the most sensitive things in their mind, and one of the closest things to their lizard brains, as we call it. I have no idea. I mean, there's several businesses out there that are transactional that people could probably go into that are easy. I mean, we met a guy this morning that was a painter, and he's doing $500,000 revenue in his business, probably going to go $750 this year, he says. And I'm like, wow, that sounds pretty easy, just talking to people getting crews to paint, right? Now, his complaint was his time was limited until he gets to a certain point. So when I made that jump, the biggest thing that I thought about was, what is it I'm looking for? And the biggest thing I was looking for is just the freedom and independence of going and think about it this way. I want to hire a compliance department, and I want to have resources available that I can pick and choose as I need, that I feel are reasonably decent enough to help support my business, and then shove everything else aside, build it the way that works the best, but have the flexibility to use what I need. So when you're making that decision to jump, I think the biggest thing you want to look at is who you're going to work with going to match your success goals. Are they going to support you in what you do? They're not going to tell you what to do. A lot of franchising doesn't work for people, for a true business owner, because he doesn't like the rules that are in place. He won't buy a McDonald's because he says, I just don't think that's the best burger and there's a better way to make it. Well, that's not what McDonald's wants. So that's the first thing you have to decide. But the second thing that I decided why I wanted to make that change was just very simply for the reason of, do I have more flexibility that I can add value and freedom to my own family and have something that I created, as opposed to being part of something bigger or a name that overlays on top of mine? And I think that's part of the reason I wanted to make the change, is have that flexibility and freedom to do what we needed to do.
Got it. Yeah, and in a minute we'll talk about some of the details of what that looks like, because
sure.
one of the I think misapprehensions that a lot of advisors have, if they've been in the employee world, is that sort of it's this all or nothing, that you're in a place where everything is decided for you, or you're out on your own,
right,
picking every single thing about your business from the ground up with no help or guidance. And obviously you and I know there's a whole spectrum from one end to the other. We'll touch on some of the specifics of what that means in your case.
Sure, yeah. Well, I'd love to get into this, so we'll touch the details. Go.
Sure.
Certainly.
From a business perspective, give me a high level of what's your typical kind of ideal client, who are you trying to work with? What do you find attracts those people? What do you, and how do you run your business at a kind of a high level?
That's the easiest way to describe that is this. First, I think you have to define your ideal client and your ideal practice. Those are the two things I think are most paramount. Our ideal clients are people who are delegators, and we have about 7 characteristics or traits we show clients. They have to be trustworthy and able to trust. They have to be able to work with you. They have to have their own values and goals and dreams outside of earning money. So once you identify your psychographic profile of our clients, and we do that through a vetting process that we use it's an off-the-shelf coaching program, but we just slightly modified, but I think it works well on it of its own, is going through a conversation that discusses the client's values. We actually never talk about money until the very end of the conversation about how much they have, which is kind of surprising to most people. So that's the way we vet the overall. Now, that client in the business model has to produce at least a predictable annual revenue every single year that has a minimum to it. So if the client, roughly, we would say a good client would have roughly, $500,000 or more of assets to manage, or they could be able to pay the minimum planning fee per year on an annual basis without question. And those recommendations, now we do more of a full-service client model where we cover 6 areas of financial planning, which includes the risk management, the wealth management, college planning, retirement planning, and everything else that goes along with it, estate planning. And we have checklists on those 6 areas every single year we cycle through. Now, not every client gets every point in the checklist, but it's always checked. Now, is it a lot more work? Sure, it's a lot more work, but what does the client get out of it? He actually gets what they're paying for. So we're basing it on the fact that, hey, look, if you want to run your business, what scale do you want to run it with a client? We have a top end of how much. I mean, I don't think it's good. I've heard that the number is $5 million or more. The client really needs a different approach to their wealth than what we can provide. I think you'd have to measure them between 5 and 10 million. Anything above 10 million, they probably need a family office scenario, possibly, or multifamily. So we're very, very specific about what clients we're looking for. Are they delegators? Do they want us to do all this work for them? We call it, are you the CEO of your family? Well, absolutely. So we'll tell you what, fire yourself as your CEO, promote yourself to a board member. Makes it a lot easier and hire us as your CEO, not your CFO, your CEO. That way, the client has a clear understanding of what our engagement process is. So that's our ideal client. And what you do is you just model everything after that. And some people say niche marketing, and yeah, you could niche market in certain areas. You could subdivide that into certain, what they call niche marketing, but I think it's a psychographic niche more than it is like a career niche, if that makes sense.
Right. Demographics are one thing, but I'm with you. A lot of people that look the same on paper have completely different approaches to money.
Absolutely.
And sort of how they work together as their spouses, or how much detail they want. Yeah, I'm with you. I like that psychographics term. What's important to them, and
yeah, and what's important. And let me qualify two other things. We don't work with do-it-yourselfers, and we avoid what we call collaborators. Collaborators are like, well, you do this stuff, and I'll do this, and I'll check on you. That sort of thing. Okay,
right.
We don't work with that personality. It's either you delegate it or you don't. And I think that's very important for advisors to understand. Do not try and work with a collaborator.
Or if that's what you like to do, for some reason you're good at that, then go for it.
Then go for it. That's right, but we don't.
I don't tend to do that either, but I guess I bring that up because I think you might have, a lot of us.
Absolutely.
You'd have less competition, right? If you somehow like to debate, if you want to have a bunch of stereotypical engineers.
Especially on the investment part. Yeah.
You want to debate people all day long? That's fine. If you're good at it and that you enjoy that, great. You should probably build your marketing around that and your positioning.
I work with engineers.
You're going to stick out. Yeah. Okay. Very, very good. And then do you have a particular, I noticed on your LinkedIn profile, you've got business owners, pilots, and medical professionals. Do you end up do those personalities fit? Or obviously pilots, you've got the background, but is that been something that's evolved, you've ended up with those kind of clients, or is that something you're trying to focus on, or how did you develop that?
We have a few. We just did it because it was recommended so that people, we do want to focus on that. And business owners is kind of broad and generic, but they really make a great client base. I mean, I'm not too much on executives of corporations. I mean, people say that's a great niche, but the problem is, they don't really have a lot you can do with them unless you charge them a planning fee. Now, some of them, if we do happen to encounter them, that's fine. But a lot of those times, it just depends on, I guess, where they're at in the world. But
sure.
Business owners seem to be a lot more complex, and we do actually a kind of a side. Amongst the other areas of planning, we actually do some business planning. We're actually kind of working on that avenue right now of trying to develop a business planning checklist using some off the existing services out there that already provide some channeling resources for you to help us develop the business market. There's a lot of different things that business owners, I mean, they've got to deal with all their own risk. They've got to deal with the buy-sell, the entity purchase, valuation. And first of all, first and foremost is, why are you in business in the first place? Are you creating a job for yourself, or do you really want to create a business that you can sell in the future?
Right.
Because that makes a huge.
And then the long-term impact, if you work with them to that phase, is what do you do when you're not going to work anymore? The emotional and financial implications of transition and succession planning is a big deal. That's a whole industry into itself. And then obviously, if you have a liquidity event and they're able to sell the business, then that's a transition that we're able to help with as well. Very good. Yeah, I think one of the things I would tell advisors and I think you would probably echo this, is work with people you like and you enjoy helping them solve their problems, help them frame their problems. And like you said, people with a lot of stock options that have worked their way up a corporate ladder, they have a lot of challenges. But if you're not interested and don't get psyched up about that and really fired up to help those people, they're probably not your best client. It's going to show through, and someone who has a passion for that or deeper experiences, it's probably going to be a better fit eventually anyway. So I find that being independent gives us a little bit more latitude because we keep more of our own revenue for one. Mm-hmm. But we can kind of pick and choose. It's a lot like dating. You can deal with people you want to deal with. You don't have to work with someone just because they happen to have a lot of money, or they might one day.
Yeah, they don't have to. I mean, there's a client I'm trying to work on, or a potential client, that he's a plastic surgeon, got his first big contract out of his residency, and working for this firm. It's like works much like a law firm where they have the junior associate type deal, and then they get a partnership agreement, and he goes from making X dollars to multiple six figures, but he has no money saved because went to school for so long. So how do you get paid? So most advisors would turn him away and say, well, we don't have much to work with. And I said, well, he needs all the planning in the world to make sure he doesn't make the same mistakes that his colleagues do. So can he write you an annual fee for for the planning services? Well, sure, absolutely. With no assets, and you help him build that part, and he certainly would appreciate that. So that's why you never want to discount anyone to help them out, because and it's all, in my opinion, you work with the emotional part and you close them with the logic, as they say, and that's what I'm looking for. I don't even care how much they have. I just want to know if they want to engage in a relationship where they're compensating us for helping them achieve, because the value of what we do versus the compensation is so tremendous in our business. And that's one of the lacking things. That just train advisors to that little area. You'll do great.
Yeah, and it's tricky because a lot of the developing that relationship is not. It's like any relationship in life. Really, you're spending a lot of time and energy to build that bond, right? And the payoff is down the road when you've worked together and gone through ups and downs and built something together, whether that's a marriage or a business or a advisory relationship. It's you kind of know how each other might react, and you know what to expect. And when stuff hits the fan, you can do it together instead of knowing if you can trust someone, right? That's the last time when you're in the foxhole of life. You need to know who you can trust in there, right? You need to have already kind of figured that out. So
absolutely.
Yeah, very good. All right, well, let me touch on, shift gears just a little bit to some of the kind of the tactics and day-to-day running things.
Absolutely.
Of, people get worried, I think, about spending money and, oh my gosh, I have to pay for stuff. If my firm pays for things. So, if you don't mind, give me a sense of, for example, how you set up your office, the things you looked at, why you chose where you are, and if you don't mind sharing about how much it costs. Of course, that's going to vary, obviously, based on geography and all that. But, give us a sense of that piece. Okay,
so basically, you do look at the contractual payout of who you're going to go work for. What I would frame it as, how much do I have to, as part of my business cash flow? I think you have to run your own pro forma to figure out what you want to spend and what you got to earn. Then you say, okay, how much do I want to pay out to the firm for doing what I need to do, what I don't want to do? So you look at
Craig,
that.
When you say pro forma, how detailed would you, give us a sense of how simple or detailed that needs to be in terms of
pro forma. I think needs to be simple enough to know that you're going to cover. Basically, if you Googled Excel spreadsheet business pro forma statement, group it as much like the taxes are going to be paid on it, right? Because you only have a certain amount of when you file your return on your expenses for your business, there's only certain categories that they need to know. You don't need to get into detail like I need to spend X dollars on X software. They don't care. Just know that, okay, technology, you need to spend this much money on your phone system, secretary, that sort of thing.
And let me interrupt briefly. I would say from getting to what does the numbers look like, I've got a spreadsheet I use that's, no more than 10 to 15 lines, entries that sort of like you said, those categories. And I asked about the office because that's one of the big two expenses that most of us incur, maybe three if you count the overhead of your firm, something less than 100% of the top line revenue that we get. But that spreadsheet can be fairly straightforward, at least to get a sense of, how do I make decisions about these expenses? So I'm happy to provide that. So anybody that wants to email me at Sean@indfa.com, I'm happy to share that little spreadsheet. But, okay, sorry about that. Go ahead.
No, go ahead. So the expenses, the way I look at expenses is, we pay rent for, let's say, instance, like $600 a month in my office. But believe it or not, the office is $1,200. But the nice thing about that is, my partner and I, Eric, he's my partner, we just share the office. Number one, it creates collaboration within it. I'm not a big guy to having my own office. And second of all, where are you going to meet your clients anyway? I never want them in my office across from me at a desk. I'd rather be at a round table in a comfortable room the way that they're saying that people should come in and see you, with a couch or a round table or something that's very simple and oriented. Because, why do they need to be in your office in the first place? There's no rule to. This is just a place where you need to exist. And second of all,
do you have access then to a conference room? I know the answer.
We have two
for our listeners.
Yeah, we have 2 conference rooms they have access to. We actually have 3 or 4, believe it or not. We have a third one, which is the building one, and then we have believe it or not, across the hallway from us, they're actually a vendor provider. They say, come and use our conference room. If you were running out of room, come into ours. You can use it anytime because they use it once a week, literally on Tuesdays.
That's a nice thing, is not have to pay for it, and that's one reason from a efficiency standpoint that comes in handy, not to have to pay for it.
And most of the time you want to do that because, first of all, just as a philosophical point, I don't really meet clients outside of the office. There's a standing rule on unknowns, what I call it, and either they come here or they talk to us on the phone. But a lot of times when we're doing this business, you want to learn not to show up at their place. The reason is the controllability of the environment. So we have to think about, when you're moving into an environment, think about what your professional business. If you don't want to be a salesperson. If you go out to them, you're a salesperson. If they come to you or they talk to you on the phone, you're a professional business owner. There's a huge difference. So going back to the expense thing, technology overlay. You've got the compliance agreement.
Hold on, back up. Okay, so we touched on the office. What about, and I'm kind of going down my experience of what the most dollars potentially get spent on. So you got the office. And you said in your case $600 a month, which I think most people would find shockingly affordable.
Yes.
And again, I know you're
all
set up. Yeah, exactly. You got great landlords. You got great landlords, free coffee, if I'm not mistaken. So. It's you're in a nice part of town, right on a major highway. You're not out in the boonies in a fairly decent sized city. You're not on the coast, but again, that's very reasonable. And again, the one conference room really presents well, and the other one's more of a more normal, or one of those 4. But very, very economical, at least from my perspective. That is.
Sure.
Now, what about from a staff assistant standpoint? How are you set up right now?
Well, I just use one part-time assistant. What I try and do is find ways to one guy I worked with, let me give you an example. One guy I worked with that was kind of a mentor at another office. When they're of a certain generation, they have a full-time assistant and pay them lots of money, and that's a big expense. Now, mind you, that's a great thing, and eventually I want to get to a point where I could hire somebody just like them, but they're really hard to find right now from what I understand. What I do is I'm going through the technology to find out now how the technology integration can reduce the expense of having a full-time assistant. First, figure out how the technology will work first, and then go back and hire the assistant to fit the technology. Because what happens is if you get everything integrated first, and number one, you have to understand how it works. Some people say, no, I don't need to worry about that stuff. Nowadays, you kind of do, because if you want to be able to find information effectively and efficiently, this is the way it works. So I have a part-time assistant that is part of she just works, pay her a certain amount per month. I have it billed directly out of the firm, so I don't have to worry about the payroll issues or W-2. They do that they pay her, and she, we schedule it's about 5 hours or plus some change a week, and some weeks I don't use her, not some weeks I don't use her. It's just sometimes there's not enough work one week, and then so you kind of bank it towards the next week, but I try and keep it even and steady. But the cool thing is she doesn't live here. She lives in Florida. So how in the heck do you get this work done with an assistant that lives in Florida? That's the advent of technology. Since mostly stuff we do is electronic, all the stuff can be scanned and sent to her, or she can build it up and use the features like DocuSign to get the document signed. The client doesn't know any different, just knows it's coming from an assistant. So and I assign those tasks through a resource management system that she gets and she logs into, sees what the task is, and we keep a running record. So we have a huge advantage of just scaling down the requirement to have someone in person to do everything. everything's gone to on the phone, to your computer, to everything. And clients some of my newer clients that I've have are just really technology savvy. It's a no-brainer. I mean, I just send it to them and they send it right back in 2 minutes or so.
Right.
The older clients are not that good, but they can't get into the system.
And a lot of that just depends on, and that's where you can build processes to hopefully make it easier on the less tech savvy or the less tech comfortable. Some of it's intimidating, even though it may not be difficult. For example, why don't you touch on, if you don't mind, sort of how we set up this meeting? That's a new tool I'm using, and I found that.
I never knew about it. I thought it was, Calendly was, I think at one time it was on a blog, but it just seems so familiar. But there's a whole problem of email battleship is what they call it, which is where, hey, what time are you available to meet? Well, here's what I'm available at. Well, I don't have that time.
Right.
How about this time? Okay. Oh, wait, we forgot to decide on the place. Where's that? Oh, well, how about, we call it the Jesuit Starbucks, which was one of the most popular places where I live in North Dallas. And it has nothing to do with a Jesuit school owning a Starbucks. It's just that's where it's located. And the funny, it's across from Jesuit High School. And so the funny part is that if you could add up all the time that you spend trying to coordinate scheduling, that you spend with wholesalers calling. I mean, I think there was an advisor I saw one time that their staff that actually did a study in all the time that people called in, all that stuff. I'm a pilot. We're really big into prevention. In fact, a flight is all about prevention, preventing things happening, from the maintenance to the flight planning to everything. You want leave nothing to chance and surprise, because the outcome is always devastating in some instances. So I'm always interested in process efficiency. One of the big things I focus on a lot in my business is, how do I make this process more efficient? How do we make more effective communication? That's what you're constantly doing and refining in this business. So this Calendly tool is like, wow, wait a minute. So I'd looked at several calendaring tools, and I was surprised that none of them fit the actual way that people want a calendar. And this is the first one I actually explored that you were using, Sean, that I said, wait a minute, this one really works the way it's supposed to.
Good. I just started using it. I didn't do a real thorough analysis. I've read about several, and I think the concept's phenomenal. Like, hey, the computer can tell what's on my calendar. It can tell what's on. It can send you an email with options, and I can, I set the parameters in there. But in fact, I'm more likely to set up these kind of interviews or just phone calls in general or meetings in person if I don't have to deal with like you just described, the setting it up process. It's like a whole other job to do that. And again, in the past, I think people have hired assistants, and a large part of their job was to do what the technology did. And I think it doesn't hurt the sort of the end user, the client, or in this case you, experience the person on the other end. Because I think we got to be careful, as I know you're cognizant of this, that we don't want technology to replace or reduce the client experience or the personal experience. But this is, hey, I take control. I pick a choice. I don't have to have you, coordinate with you or link up with you or your assistant to tell me my 5 options. I just do it myself. And it's, the 99% of the people we're going to work with are probably pretty comfortable with that approach. So, for $10 a month, I set up. I'm still really diving into it, but setting up different categories. And again, there's lots of people that are way ahead of me on technology, but I feel like you and I know lots of advisors who and if you're not using a tool like that, then that tells you I know you're pretty quick to adapt something that you think will add efficiency. So
there's 2 things you want to measure, and I think this is very important for advisor to understand. Your time is valuable, and also the cost. So what ends up happening is the cost, is based on your hourly cost. If my rate's $220 an hour for planning, should I be spending 20 minutes trying to schedule stuff? So how much of that is worth your time, as opposed to sending it out to the client and just following up? You could probably cut out about 40 to 50% of the effort required just by sending something to a client. Say, hey, look at this calendar. Pick a time, put it in, and automatically schedule it. Great. That's happy by me. So that's, sometimes another very efficient tool besides that on new, clients that need to schedule something is once they schedule it, sometimes you can use the Outlook feature of scheduling time, and most people, once they pretty much agree and you say that's good and you don't need to use a calendar system, that does a pretty efficient job as well. But the big thing is holding people accountable in that process.
Right. Are there any other, so from a staffing standpoint, it sounds like you've got a pretty good option, and I assume that would be somewhat scalable in terms of adding more time if you need to. Just as a semi-selfish plug, and also to kind of point out that there are other resources out there. How did you link up with that part-time assistant?
Well, actually, it was recommended by, I think you were the first one that came up. She was looking around for doing some extra work, and I needed someone who needed part-time, but I didn't need someone here in the office.
Right.
The cost was more than reasonable. I mean, eventually I may have to have another part-timer in the office at some point, eventually working towards the full-time. And that's where I think that, that you can, and this is, I think, is a big gaping hole in the industry is, hey, there are advisors that could use some help, just like this lady does, but it would be great to have a centralized platform where they knew exactly how your business worked, or at least knew the tools and processes. They could understand it, and then hire them, and not even worry about, putting them in an office, setting them up, training them, that sort of thing. I mean, haven't seen a good resource pool yet.
Yeah, agreed. Well, and I think I've told you this. One of my many ideas for a new business would be for our broker-dealer, which is the largest independent one. There's lots of people like us that could probably use some help, but they may or may not need a full-time person just for one advisor, right? They might be able to share in, half their time, a third of their time, a fourth of their time. But how do you share that person effectively? And it can be done, but it takes some foresight, some thought. And again, maybe you find people that all use the same CRM, or that all have a similar mindset of how you talk to clients, or if you're going to deal with clients that are over 80, and that's where there's probably a business opportunity, and I would love to figure that out. But and then use the technology correctly and educate advisors to use it, because we all have different speeds at which we adapt to new options. Yeah,
packages. I think there was one lady that tried that, but she was trying to go across multiple platforms, but it just wasn't working. You have to either choose specific channels, and I think the rates were I think advisors weren't really ready to bite off on some of that, so you kind of have to start small and grow into it if their business grows. Because what you have to, I think one of the lacking things is what sort of business value are you getting for that on the time.
Right.
And, because advisors are always looking for new clients. So.
Right. And I think the big takeaway for an advisor who's considering independence, or maybe who's already there but hasn't thought this through, there are a lot of ways to build your capabilities and resources to help you grow in a modular way, very a la carte, where you're not taking down a $60,000 a year plus benefits plus 401k employee, because that's intimidating cost and headache-wise, just setting it up. There are options out there. You just have to kind of dig around and connect with people, and that's one thing I love to do. And again, it's not a full-time endeavor for me, but given my other responsibilities, but it can be done, and it's not.
It sure can. Mm-hmm.
Yeah, so that's a big deal. There's ways to get there. All right, very good. Do you have any other favorite kind of resources or tools you use that kind of you feel like are critical to your business?
Yes,
or major expenses. We haven't touched on health insurance, but we'll get to that. But what else do you spend money on, and/or what are your favorite things that you use day to day?
Well, the main thing you got to remember is that it's all part of a system. So as a resource, you got to have a resource management system, and not just for your business. So we use Redtail Technology as one of my favorites. I think it does a great job. They've been around for a long time. They're more integrating now. We have a contract with the broker dealer anyway to more integrate. We don't data feed yet the assets for the client, but they integrate with.
Coming soon.
Yes. But I'll tell you what, the other thing I just found out the other day, that Jive Communications, which we use Ring Central right now for our phone system, Jive actually has what they call an application portal interface. I think it's called an API, and tech speak, and that system will now allow when a client calls in, if it recognizes that number in the database, it logs the call for you and automatically brings it up in the database. I said, well, great, we're moving to Jive because the Ring Central doesn't have that. So, and they're just as good as an IP phone provider as anybody else, but boy, what a great tool to have to record when a client calls in. One aspect I use the eMoney Street version, not the one that's branded, because they move a little bit quicker, and I don't really want the client logging into their what they call the account view system, where they find their statements just for their investments. I feel that they have that access to that portal, but the view and interface of that when they first get there is looking at their account value right off the bat, which is not what I want them focusing on. I want them focusing on their total net, where they're going, their goals-based vision, and that sort of thing. So I use eMoney Advisor branded version for that purpose. I'm a very goals-focused planner. So, and that platform has a lot of integrations. It integrates with Redtail, integrates with Morningstar, integrates with Riskalyze. And I think we're just about to sign on with doing our own Riskalyze account, because I didn't even realize how in-depth they got psychologically into working with clients. So helps, and I think it's a great tool since it was built by psychologists and not by investment people. So that's another thing we like doing. We don't have to worry about the printer because we have one here. That scans and does all that. I mean, I think that we don't really get much into research except for LPL, and Morningstar. We use a little bit of that. And personally, I like using Horse's Mouth for a lot of client communications and ideas from other advisors. I mean, they have Horse's Mouth Radio, which has a lot of advisors talking about their practice, but I think that's an essential tool for marketing, is using that service. It costs about $1,000 a year, but you get some great things that are working, and they really focus on helping you build your business. And then I think you need to pick a system out there like Bill Backrack is now putting on his system online this summer, and he's running a special right now, believe it or not, for $600 to have access to some of his tools that he uses to help you build your business. So I think you need to have a business focus, or use CEG Worldwide as another tool that would help you coach. But I think coaching, if you don't know where you're going, I think some coaching would be beneficial. So I use some of that as well. But mostly, other than that, just try various tools until you find something that works. Make sure they integrate.
Great.
And I think,
what's interesting about what you laid out there is, I think that can be intimidating to the person who hasn't made those kinds of decisions. But in many cases, there's any number of people, coaches, product providers, your colleagues, your peers, that are willing to say, here's what I use and here's why I like it. And that's another reason I started the podcast, was to hear, some people say Salesforce is the greatest thing since sliced bread, and many of us will say, that's a little bit overkill for what I'm trying to accomplish the size of my enterprise.
Yeah.
And people that say they can do what they need with Outlook, which, seems limiting to me, but, and to a lot of us, but hey, if it works and you're organized, again.
I think it all goes back to one thing. I think it goes back to, you can use Outlook, but if you don't have a CRM, how are you going to record your client interactions as part of your compliance requirement for recommendations? I mean, I also use the recording software.
CopyTalk.
CopyTalk, or the other one that I have, which the other is another one too. But I use it, and they just say fire your assistant, because and what it does is it's a great transcriptionist software that helps you you record your content to your meeting, and that's where I think that's what's also really important, is making sure that CRM software or something. It should never happen if your business is set up right, but you never know if you pick the wrong client, they want to come back at you. From what I understand from an old compliance officer I worked with, it was actually on the FINRA board. He worked on the arbitration board. He told me exactly how it worked. He told me exactly what you do, and he told me exactly how to document things. And he said the weight of the paper will overwhelm them, and if there's the first thing you're going to ask is if you ever had a disclosure request, send them everything you have, and if they look at it and they say, and the client has nothing, don't worry, it's not going anywhere. So
that's good to hear. Yeah. Now, one other big expense, and especially unknown, that I think a lot of people that are that are already self-employed or that would consider it, one big consideration is health insurance. How do you have your family covered right now?
Okay, so that's an interesting with our family. We have one child who has special needs. He's more on the spectrum for autism, and very mild to moderate, but we had to review our health care coverage last year because, as you know, with the advent of the new health care system has caused quite a bit of stir in the amount of premium you've got to pay. So was your existing policy?
How was your existing policy set up? Was it an independent private policy?
Yeah, it was independent. We used a healthcare plan through Scott and White, and we changed it last year. They're great plans. I mean, unfortunately the healthcare landscape is changing, and not even corporations next year are going to get hammered with it exactly based on the new laws coming. So it doesn't matter if you're working for I'll tell you this, from what I understand from the healthcare people, it doesn't matter if you're going to be working for a corporation or being independent. It's going to be almost the same because corporations are not going to expend that much money subsidizing healthcare plans as much as they have in the past versus the premiums that are going to be charged. The corporations have been affording quite a bit of benefit because of their current contracts, but now those contracts are coming to an end, and the major healthcare groups are changing them because they can't afford to let those corporations pay the lower premiums anymore. So I'll tell you that this is coming next year. So what we did was we went with, there's a group out there that does it based on, I guess it's called, if it's religious preference, I guess you could say, or based on your beliefs, that qualifies as a private health care plan based on social conscious type thing that I participate in with myself, my first son, and then my wife, which is a much lower cost because we don't spend a lot on health care since we work on the preventative side a lot as it is. So we just want something just in case something happens. And it doesn't matter anyway because you can be on now literally, which is a completely against insurance philosophy, is you can literally go to the hospital and buy insurance for a major medical. Yeah. It's funny, but it's completely against insurance modeling. It's like, well, that's weird. My other son, who's mildly autistic, we put on his own separate health care plan. It's a gold plan because we know that he needs certain occupational and speech therapies, and that plan was cost effective because of the premium cost. So we basically, from last year to this year, we cut our cost in half in health care. It was unbelievable and it was a friend of ours that recommended it because he's self-employed too, and his wife found this plan that we could use, and we said, sounds like a good deal to me, so that's what we did.
That's great. Yeah, I think you touched on one of the big principles that I tend to espouse, which is it doesn't matter where you are. If health insurance costs are going up, you're going to feel them. You know, the wirehouses of the world are not, or any employer, they are not covering your, cost of your doing business just for their own benefit. They're doing it, as part of an overall package. So if they have to pay more here, they're either going to not pay it or they're going to tweak your payout. Otherwise, there's no free lunch. Now, again, a 50,000 person organization might have a little bit better pricing power than you and me individually. But my observation is that, especially in our business where we can generate pretty nice incomes, at a lot of places, the health insurance, again, that's probably across the board, but I know at least one firm subsidizes the newer advisors, but not the more experienced ones, for example.
No, I agree with that. Now, I'll tell you this, to give you a quick story. A friend of mine's wife asked me when they went to and he works for a wirehouse private trust area, and thinking that he would be knowledgeable, which he wasn't, about their health care plan, his wife asks me, the financial planner, how does this health care plan work? I don't get this. So I had to explain it to her because she was dealing with that part and gave her kind of the quick story of how it worked. And she's like, man, this is terrible. I mean, we used to just go to the doctor, pay $25, and that's all we paid. I said, it's not the way of the world anymore. I said, you're going to be borne in a lot of the costs personally. And that's the mentality is, that's one of the problems is they think, well, all I have to do is it's a $50 visit or $35 visit. And guess what? It's no longer the case for them. And then they go to the hospital or ER, get admitted, and then they get their portion of the bill. And they don't understand that either. Well, I never paid this before. So the mentality is still there, and that's one of the things that I think is going to be big thing.
Right, agreed. And again, I don't think there's any silver bullet to being independent that makes the health insurance great, but like you said, it's sort of a global in terms of wherever you work issue, not specific to there's no hiding out as an employee anymore.
Exactly.
Okay. Are there any other things? One thing I want to ask you about briefly, you've touched on in a lot of ways, but one assumption some of us have that are working in the wirehouses or employee firms is that there's going to be all this stuff we have to do every day to run the business, compliance or keep it up with the computer breaks or quote unquote running a business sounds overwhelming or intimidating. What's your experience and what would you have to say for people that want to kind of hear what that's really like?
Well, I think that yes, there is going to be some extra work for you. But the thing is go to other advisors who have been there and ask them what they're doing in respect to that issue. So one of the things that the recommendations I have is I just saw a buddy of mine who I used to work with or kind of work on a coaching program with, and he's now working for a national real estate firm helping with their coaching, and they just put out a blog article today about time blocking, how important it is to be successful. You have to time block on your calendar, and that just means general area of what you're going to do that moment, doesn't mean the specific tasks. So if you're going to run your business and you're going to be paying yourself as a CEO, CFO of your corporation if you're going to run it, right? So you have to reserve some time during the week to accommodate those specific tasks that you need to get through, if at all. Most important thing is just learn like a Covey method. We're using the quadrants, 1, 2, 3, and 4. And depending on how those quadrants fill up, those 1, 2, 3, 4 quadrants, the important, urgent, important, not urgent, that sort of thing, not important, not urgent, that sort of, and when it gets to quadrants 3 and 4, those should all be delegated items. Those delegated items are the items that are your CEO, CFO type duties. Your quadrant 2 items, which is your not important, urgent, are your advisor duties. And the reason I say that is because quadrants 3 and 4 are your $30 to $40 an hour items, and your quadrant 2 is your $220 an hour item. So when you're doing your extra work that you will be required, you'll learn and gradually learn a system that works for you. It's okay, I'll take care of these administrative items as they come up, and it'll help you decide whether or not you need an assistant to do that work. But quadranting your tasks is very, very important in keeping an organized day. That's one thing that most advisors are probably not used to because, a lot of times I think that if you're coming from a wirehouse, they'll provide someone to do processing of your work for you sometimes, and they mostly just want you in sales mode to acquire new clients. And the difference is that you're going to have to get used to 2 different roles, and that is one is being the president of your company, and the second one is you got to still be the advisor. But in the coaching system I learned, you learn to delegate all that stuff anyway, and you can still make an ideal life out of it.
Sure. Great. No, that's a great point, and it's a very kind of high level and important business concept that you don't really. There's no reason to be extra efficient with your time when you're get. It's a very similar payout regardless. But when you have your own practice and you have the responsibility and the opportunity to make those allocations of time and money, that I think that's what really drew me to the independent model in the first place. So it's great to hear you kind of talk about similar things. Well, great. Well, I think we've covered a lot of ground, and I think people if they have questions, how would they track you down? And also, I guess before that, is there anything you don't like about being independent, or if you had a do-over, what would you do differently in your career?
If I didn't, I would say if I had more coaching in the very beginning about doing it, making sure I had someone who's guiding me, a mentor that really was aligned and understood. The one thing I probably would have sought out is someone who has been through the ropes, and you need someone who's experienced, because one of the things is when you go with a coach or a mentor, did they actually go through the experience? That's one of the problems in the industry is people that don't teach is the old rule, right? And so one of the funny parts is that I had a really good mentor in the beginning to understand people, excellent at what he did, very passionate. And I miss having that sort of interaction with somebody at the level you get to. So when you step out into, I wish I would have had a little bit ongoing, continuing mentorship, because a lot of this is, was trial by fire, taking risk and doing things. So having a more structured, focused system, finding the right system out there that fits you is what I think is what I wanted more of. It just took me a while to get my footing on that. So
Right, yeah. And sometimes you don't know you're on a path that you're not going to like until you get down it a ways and actually want to shift gears. Yeah, it's kind of a tricky thing to navigate. Well, great, Craig. I appreciate your time. How can people find you if they want to pick your brain or have ideas or want more detail that
well, they can go to our
happy to share?
Yeah, our firm website is cardinal, like the bird, the letters WA.com. They can give us a call at our office, 972-590-8808, or they can just email me at Craig at cardinalwa.com.
Great. Well, thanks again for your time, and I think people will appreciate this. Have a great day.